Ottawa resume includes time spent as Deputy Prime Minister under Paul Martin. Fiscal matters keep Sean Speer awake at night. He was a senior advisor to former Prime Minister Stephen Harper. And here in studio, Derek Decloet joining us. He helped oversee the coverage of the fall economic update for the Bloomberg News team. He oversees coverage overall for Bloomberg here in Canada. And Derek, I will start with you because I guess the Bay Street reaction is what we lean into here at BNN Bloomberg. What do you think the biggest takeaway was for Bay Street from this update?
I mean, I think this document was a statement that the size of the deficit matters, but to this government, balanced budgets don't really matter. I mean, you know, they've obviously increased the size of the deficit going forward. I mean, think about the economic situation we're in. I mean, we have pretty close to full employment. Yes, growth is slowing, and obviously things are deteriorating. You can see that in all of the data. But you know, this should be probably a pretty close to balanced budget if you had a philosophy that balanced budgets counted. And instead, what they have done over the next 4 years is they've added a projected $36 billion in deficits. Part of that's because revenue is going to deteriorate as the economy does. So I think that's kind of the big takeaway. It's not all negative. It's certainly, you know, it's not like the deficit is exploding out of control or anything. It's more like, you know, is there enough firepower here if the economy turns down?
Yeah.
Because we're not that close to balance relative to where we might be.
And McLellan, should we have projected numbers like the ones that were shared yesterday?
Yeah, I think so. In light of what's happening in the economy, obviously not quite so much revenue coming into government coffers because the economy is slowing. But I have two big takeaways from this. One, I was part of the government in 95, 96 that took the federal government, other than for CMHC, out of housing entirely. And subsequent governments of ours and Mr. Harper's didn't get back into the space. And I guess we can reflect on whether that was a good decision at the time or not. But it's quite clear that the federal government now realizes there does need to be a national role. The government of Canada needs to be involved in housing. And that we've got a difficult situation around housing shortages of all kinds. So it's really interesting that this government is getting back into housing in a big way. The other thing, that big takeaway for me, is that in fact we are finally starting to get some concrete dates in terms of all the clean tech tax credits and contracts for difference and things like that, which are key to driving the energy transition and a clean or green economy. And we got some detail in the FES in relation to targets, timelines, and so on. Those are, I think, two really important takeaways.
All right, that's helpful context, Anne. And on uncertainty, certainly the business community likes it, so having a time frame can be helpful. Sean Speer, I do want to, I mean, I'm sure you've got plenty to say on the fiscal picture, but I do want to come back to Anne's point on housing. What is your perspective? I mean, how would you characterize what the government's doing on the housing front right now?
Well, John, your viewers know better than anyone in the country that the way to think about markets is a supply side and the demand side. And what we're seeing the federal government do is scramble to try to boost on the supply side, of course, because we've seen such extraordinary population growth over the past few years because of the demand side choices the government has made, principally around immigration, and not just the permanent resident stream that people think of, you know, that is to say the point system that we use to bring people into the country on a permanent basis. We've seen an explosion, John, of non-permanent resident migrants, including international students and temporary foreign workers. So I think while the government gets some credit for the steps it's taken to try to bring supply and demand into something approaching equilibrium, there is criticism from those who follow these issues carefully that it hasn't looked at the demand side of the equation. It hasn't done anything, for instance, to constrain the number of international students coming into the country or the number of temporary foreign workers. As long as those levers are off the table, it seems to me we're going to be scrambling to try to boost supply in an environment that your viewers know well is difficult to do because of land use regulations, fees, cost of capital, et cetera. So I think it's a very long way of saying Anna is right. There's some useful steps here, but I think as long as we we continue to avoid looking at the demand side of the equation, we're going to have a fundamental problem. That's just basic economics.
And Derek Decloet, just to bring you back to the conversation, and we do like our numbers at BNN Bloomberg. I mean, CMHC itself has talked about numbers like 3.5 million housing units needed over the next decade to address the affordability issue. So when we're talking about tens of thousands of possible units created from new measures, that obviously is a starting point, but there's a long way to go. And then I guess for the economy itself, what are some of the takeaways on what the feds are, looking to the Bay Street economists for in terms of where we go from here? And I would imagine the shape of the economy heading into the next couple of years is going to be another determining factor here.
That's right. I mean, slower growth, but also interest rates have become, a big issue, as has been discussed, on your, I think, your previous segment and others. We are looking at the first time in the 8-year lifespan of this government where they have to really think about how they borrow, how much they borrow, because the cost of borrowing is all of a sudden very real. I think Sean's point about the complexity of the housing problem, I mean, you can throw a lot of money at it, but even throwing a lot of money at it doesn't solve the problem quickly because the shortage is so acute and it's been building up, for so many years. It's not, entirely the fault of this government. If you want to place blame, you can place it in lots of different places at lots of different levels of government. But, those expanded deficit figures, they include the GST exemption on rental housing. I mean, that will for sure help build rental housing, but it's going to be years before you really see it.
Okay. Anne McLellan, the finance minister was citing some stats about investing in Canada in a fairly positive light, the idea that there's still a lot of attractiveness when it comes to money coming into the country for big projects. You talked about some certainty, I suppose, on the tax situation, credits available around clean energy projects. How much more certainty do you think those who you speak with on a regular basis have when it comes to actually investing in Canada the next few years?
Well, one of the things is if you go to Japan or South Korea, they are really interested in investing in Canada. Minister Champagne is there regularly and hears that. But what he also hears is, but can you guys get anything built? Right? And there is reference in the FES to a new committee of cabinet chaired by Seamus O'Regan in terms of looking at efficiency and effectiveness as it relates to the regulatory regime, in particular with clean tech investments. But you know what? We need action. We need urgency because there is money on the sidelines, both here at home and around the world, waiting to invest in the things that we have to offer the world to drive the clean tech revolution. But what we need is certainty. We need efficiency and effectiveness around the regulatory regime. We need certainty around contracts for difference. And we need to get the details of those tax credits on CCUS, on hydrogen that were announced 2 years ago in Budget 21. That's a 2-year gap, over a 2-year gap. And you've got money on the sidelines and it's going to other places. It's either on the sidelines or it's being invested in the United States through the IRA. And we just have to get a sense of urgency in terms of the investment and economic growth agenda.
And on the subject of urgency, Sean Speer, Derek was referencing that there is no urgency on returning to balanced budgets in this country. I guess that was one of the takeaways. And, there's a number of stats that we can throw at our audience, whether it's, the debt to GDP ratio coming down at a slower rate, if it's the amount of the money that we are spending on debt repayment alone as a percentage of the total spending number going up. I guess one question is, which of these numbers matter to, let's say, the markets or the credit rating agencies, which I guess there is a point at which that becomes a concern. I'm not sure that's a concern today, but what's your perspective on that?
Yeah, it's a great question, John. I think the government can make a positive case that debt to GDP is essentially stabilized, and all things being equal, and we'll come back to that in a second, looks to be on a downward trajectory. But it's that all things being equal part that I think is important for viewers to understand. Between the March budget and yesterday's fall economic statement, so approximately 8 months, the government's projections for the next 5 years increased deficits, as Derek said earlier, by a cumulative amount of $36 billion. Now, if all things remain equal, that is stable, but we still have a budget coming in March, a fall economic statement in the subsequent November, and another budget after that, all before the next federal election. And if you think those numbers aren't going to change, we're not going to see incremental spending in those subsequent budgetary announcements, then I have, an igloo to sell you or something like that. I do think that, as Derek said earlier, one of the biggest challenges facing this government is persuading markets, investors, and Canadians that is prepared to exercise fiscal discipline. Fiscal discipline within a governing philosophy that's not going to change. It's a government that's predisposed to a more active role for the state and the economy. Fair enough. But it seems to me there's a lot of downside in the numbers that were released yesterday. If I was a betting person, I would say come the March budget, those numbers are going to deteriorate further. And then at that point, John, the government's positive narrative about debt to GDP becomes under stress.
All right. A lot to consider there. Sean, thanks very much. Good learning. You have some great books behind you, too. I could learn a lot from those. Sean Speer joining us, former senior advisor to Prime Minister Stephen Harper. And McLellan, thank you so much for your time. As always, senior advisor of Bennett Jones, former deputy prime minister under Paul Martin. Our appreciation to Derek Decloet of the Bloomberg News team here in studio as well.